Perfect time to bring on board Vibhav Kapoor, Chief Investment Strategist or Group Strategist with the ILNFS. Vibhav, morning. Thank you for joining us. Vibhav, most of the key events are now behind us. Budget is over. Credit policy of the Reserve Bank of India commentary policy is also done and dusted. So what to your mind could be the next big trigger for our markets?
I think the next trigger obviously, is going to be the corporate results, which start in the middle of next month. And of course, if there are any events in terms of, I think the market is going to closely watch, for example, oil prices. So any big movements there either way could have an impact on the market and any other global developments.
Vibhav, so far this year, liquidity has surprised us on the upside. Do you think now earnings have potential to surprise us on the upside?
I think earnings for this quarter are going to be roughly in line with estimates. What we really need to watch out for is how earnings behave in FY13. There is, I think, a potential for a little bit of upside there or upgrades there, provided oil prices remain low and commodity prices don't go up or commodity prices come down. The latter is possible, with China slowing down and the rest of the global economy is not doing so well. But one is not so sure about oil, particularly because of the Iran situation, etc. So I think there is a slight chance of some earnings upgrades happening in the second half of FY13, but not before that.
Because since the budget was pretty much silent on, anything about fuel pricing, do you think there is going to be a significant quantum of a fuel price hike once the budget session of the parliament gets done?
No, I don't think so. I think it's going to be very, very difficult for the government to push through any major hike in, prices, maybe apart from petrol. Which they may be able to do so. I think there's too much political opposition and there is too much uncertainty there. I doubt very much that you're going to see a major hike.
Vibhav, at a time when Bank of Japan is following a loose monetary policy, Operation Twist is on in US and LTRO has just started in Europe. Do you think in the near term and the medium term liquidity will remain strong?
Yeah, in fact, I think that's one of the few positives which are out there for the Indian markets today, which is that the global liquidity probably will remain strong for some time to come. Second is probably that valuations are reasonable at this point of time. And I think these are the two factors which, are preventing or which would prevent a major downside in the markets, provided oil prices don't go up too much. So yes, liquidity, I think, will continue to remain good globally, and some of that will definitely flow into India.
Can this market only sustain these levels because of liquidity? Because ultimately liquidity will chase value and fundamentals.
Yeah, but the second point is that valuations are also reasonable. Valuations are not expensive. So as long as valuations are okay and liquidity is there, that can easily prevent fall in the market and maybe even make the market go up somewhat from here. But that is why we are not overly bullish and we are not overly bearish on the market right now. We think the range of about 5,100 to 5,700 is going to be there for the next maybe few months, because once you reach that 56, 5,700 levels, then that second leg of the whole equation, which is the valuations, they don't start looking that attractive beyond those levels, and that is when the liquidity may not chase the market from there onwards. So I think, but at 51, 52, certainly I think some liquidity can come in because of the valuation. So I think the range of 51, 57 is something you'll see for quite some time to come.
Okay, I just want to pause for a bit and mark TTK Prestige. And now CLSA has initiated a buy on TTK Prestige with a price target of 3,500. That's the 12-month price target that they've set. It's been a vertical notch up for TTK Prestige from opening bell. 29.23 on this one, up a good 5%. Okay, let's also chat about some other movers in trade right now and what the market really is up to. So it's been an okay start, you would have to say. 52.74 is where the index is. So it's largely looking flat. Futures 52.96. So we're still staring at sub 5,300 levels. Watch out for banks because that's wherein lies the key of how the market actually pans out. Remember yesterday as well, the pickup was thanks to the banks. And yes, banks are lying absolutely flat in trade right now. Vibhav, just want to get you in on what the central bank may end up doing, because up until now we haven't quite heard anything constructive on interest rates, barring the fact that their intention is pretty much there to actually cut them and ease them off in FY13. But do you think from all practicality they would be able to do this aggressively, given that oil prices are still pretty much escalating and the government borrowing as well is pretty high?
Absolutely. I think that's obviously the third factor which is very important for the markets. There is definitely, I think, the intention of the RBI to cut rates if at all possible. But obviously the budget and oil prices, the inability of government to raise prices of anything, all that's going to make it pretty difficult. And this 5.1% fiscal deficit is something which we don't know whether the government is going to be able to manage that. I doubt it very much. So I think you could have some interest rate cuts, but they're going to get a little bit delayed. Secondly, even if they do happen, I think it's going to be very difficult for them to cut beyond, say, 50 and maximum 75 basis points in the next financial year. So that's again something which could have somewhat positive impact on the markets, particularly at lower levels, and could keep them buoyant for some time to come. So it's a pretty tricky situation. I think if the market finds after some time that the RBI is not willing to cut or not able to cut rates, then you will definitely have a negative reaction.
Vibhav, we are at about 5,300 on the Nifty and about 18,000 on the index, which is a appreciation of about 15% this year. Do you think in next 6 months Indian markets could appreciate by another 15%?
I doubt it very much. As I said, I think 5,700, 5,800, beyond that it's going to be very difficult for the market. So let's say about 10% from here. From current levels is the maximum upside I would expect over the next 6 months, unless you have some real positives happening in terms of oil prices falling back to 110 and the government being able to raise prices of oil products, and then that allows the RBI to cut rates more aggressively. Only then I would see the possibility of more than 10% increase from here in the next 6 months.